Thank you for joining me. I'm Alex, and I want to talk about Cisco today. What Cisco does is mostly networking, telecommunications, some other stuff, mostly hardware. And they have been in the field very long time, considering the field is not very old anyway. Current price $43.96, which gives them market cap of $186 billion. Dividend is currently 3.2% with a payout ratio of 58%, which is definitely not bad. Current revenue $49.3 billion, which is down 4-ish%. Earnings $11.2 billion, which is down 0.4%. I don't math. Current PE of 18 with a forward PE of 14, which is also certainly not bad at all. Total assets, $94.9 billion. Total liabilities, $56.9 billion, both down, which is not really something that you see a lot these days. And that gives them a total stockholders' equity of $37.9 billion. I really like this balance sheet, and I really also like this balance sheet in relation to the market cap. $40 billion on the balance sheet with $186 billion market cap is not terrible. Also not too great if you look at it like that, but for technology companies, obviously you don't generally look at book value. So risk factors are very few, I would say. I mentioned in a previous video that there are companies that are trying to kind of do their own thing, and Facebook for one, Google for another, they do tend to try to integrate things. I still think that Cisco does have a really huge market, even if there's very few companies trying to do their own thing, and even if they do manage it, they're not going to be big competitors. Facebook kind of just wants to do their own thing for in-house applications, not really to sell. So as far as the risk factors go, I would say if China develops their own technology and tries to sell that internationally for a lower price, that could possibly be a problem. But Cisco is not really in the low-end market either way, so I don't think there's a lot of huge risk factors here. Global pandemic would probably be a risk factor because companies on the whole are just not investing as much as they used to. But I think that would be a temporary slowdown, maybe a couple years. And overall, obviously the balance sheet is good enough to weather, several years of, lack of investment. So obviously for a growth investor, there's nothing here because growth is negative. But these numbers came out in July and certainly have a huge impact of the pandemic already in them. And so I really don't think that the revenue slowing down is really a big concern, especially when it's this little with a pandemic raging. So yeah, nothing for a growth investor. For a dividend investor, the dividend yield of 3.2% certainly way higher than anything you can get on the bond market. And I think that the risk is not high enough to justify buying bonds over Cisco. So for a dividend investor, definitely a very good stock to look into. Very stable business, obviously, and fairly well run. For a value investor, the PE looks decent, the balance sheet is amazing, the dividend is a nice bonus, and the only thing that's really slightly concerning is the slowing revenue, but even that is not a huge factor. So overall, I would say very interesting company to look into, especially at the current price. Definitely would recommend to most dividend and value investors. That's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.